Okay. All right. First off, thank you all for joining me today. I know your time is incredibly valuable, so I greatly appreciate you taking the time to learn more about Validea and the investing system we've built here. My name is Justin Carbonell. I'm one of the partners here at Validea. I've been working with John Reese and the team here for more than 15 years. Over the next 25 to 30 minutes, what I'm going to be doing is walking you through the tools and features on Validea. While it's important to note that much of what you see here today is in fact behind a paywall, there are many parts of the website that are free for you to utilize. I will try to point these out as we go through the presentation today. Just a few things administratively before we start. I will answer questions, but at the end of the presentation, this will allow me to get through the webinar and then let people to choose to go and drop off if they don't want to stay around for the Q&A. If for some reason the webinar freezes, and you may have to come back in, you can go back to the link in the email and relaunch the webinar, and hopefully that should bring you back into the live room as the webinar is going on. At the end of the session, what I'll be doing is I'll be emailing all of you that took the time out to watch this today, the Peter Lynch and Warren Buffett chapters from our book, The Guru Investor. And I'll also be emailing you a special offer for those that want to learn more and utilize the full suite of investment research tools we've developed here at Validea. So first off, let me try to give you a high-level overview of what it actually is we do here. Our mission is simple. We are trying to empower investors like yourself by utilizing the investment models that have shown the ability to work over time. What we are known best for is taking the stock picking strategies of legendary investors, so people like Warren Buffett and Peter Lynch, and developing computerized investment models off of those. I will show you how we use these models in allowing investors like yourself to analyze stocks, find new investment ideas, and also construct model portfolios. We also run other quantitative methods, like our trend following tool, that show robustness in terms of delivering outperformance and in many cases lowering risk. We'll walk through that as well. Okay, so with all that being said, let's take a look behind the curtain and let me show you what we can do here on Validea. The first feature I would like to show you is our Guru Analysis tool. And the way that you get there is you just go Research, Guru Analysis. The Guru Analysis is really the engine behind much of what we do here, and that's how I hope you guys think about it. This is really the computer system that scores and ranks the stocks in our system. So what this Guru Analysis tool actually does is it takes the fundamental strategies from 12 different investors, Benjamin Graham, Joe Greenblatt, John Neff, Peter Lynch, Ken Fisher, and a host of others, and allows you to see how any stock scores according to the criteria utilized in that investment strategy. So this is like a scoring system. It gives you an independent assessment of the stocks through the lens of approximately a dozen fundamentally based models. Each model is different in terms of its focus and specific criteria, and stocks are scored on a score of 0 to 100. So let's just take a look at one example. In our system, there's over 6,000 securities, but I'm going to use now the largest company, the $1 trillion market cap company, largest company in the market, Apple. So here we're looking at Apple through the lens of the various strategies we run on Validea. So this first page is really like a summary table. It shows you for any stock the high-level scores across each Guru strategy. This feature is actually free to use. You do not need to be a subscriber to get a quick score of the stocks that you're interested in, whether or not they're the stocks in your portfolio. Maybe you're reading Barron's, maybe you have CNBC on, where you're sourcing new ideas and you just want a quick assessment of how these stocks score fundamentally. You can use this tool and you don't have to pay us for it. So that's completely up to you if you want to do it. But probably, at least in my opinion, the real value is in the detail behind these scores. So let's take a look at Apple through the lens of the Warren Buffett model as we've captured it. So here what you're looking at is the detailed analysis of how our Warren Buffett strategy goes about looking at Apple and its investment prospects. So at the top of the page, you have some basic company and fundamental information here, what the company does, so a description. Obviously, this is useful if you're looking at a company that you know nothing about. we're going to tell you what the company does. But as you scroll down the page, what you're essentially seeing here is the detailed analysis behind the why our Buffett model rates Apple a 93%. So this is a pretty robust, one of our, I'd say, more robust strategies. We base it off the book Buffettology, which was written by Mary Buffett, Buffett's ex-daughter-in-law. But it starts out by looking at 10 years of earnings, the company's ability to pay off debt, return on equity, return on capital, which shows whether or not the firm has a durable competitive advantage. And then it goes through a whole host of other investment criteria to determine if this particular strategy would rate the stock highly or not. And in this case, Apple is now Berkshire's largest holding, and our Buffett model scores Apple very highly. So that's nicely aligned with something that's actually happening in the real world. You can use this drop down to show how other strategies score the stock. So for instance, if we want to look at Apple through a growth investor strategy, one based on the methodology by Martin Zweig, we can come in here and we can say, okay, let's switch it, and then let's look at Apple through this different method. And so all of these criteria are variabilized, meaning anytime you see a bold number or the ticker symbol, that's going to change, obviously, if you're looking at a different company. So if we were looking at Microsoft, you're going to get a different set of scores because Microsoft has different fundamentals than Apple. Okay, so that's the GRU analysis tool. Again, that's really the engine for the way that we score and rank stocks. And what it, I think, does is it can give you a very nice quick snapshot of how well or how poorly a stock stacks up fundamentally. One thing I'd say is that our models tend to have a bias towards companies that make money, companies that are profitable, companies that have solid balance sheets. These are fundamentally based strategies, and those types of investment criteria are important. So, stocks that aren't making money, that are trading at sky high valuations, they're probably not going to score very highly across a large subset of models we run. That's just something to know. The next feature I'd like to show you is our model portfolios. So again, I'm using the top navigation here, and I'm just going to all portfolios. In 2003, we launched the model portfolios, which are portfolios that hold the top rated stocks according to each of the investment models we run. Our goal with the model portfolio system was to show that by buying the best stocks according to each of these strategies, you had a very good chance for generating long-term market outperformance. The model portfolios on Validea select the top 10 or 20 names, so you can choose different size portfolios in the drop-down here. And we also follow portfolios that are rebalanced over different time periods, so monthly, quarterly, or annually. What I mean by rebalancing is those rebalancing frequencies, so a monthly rebalance, a quarterly rebalance, is when the portfolio is rerun and stocks are added and stocks are removed from the portfolio. And I'll show you an example of that in a moment. So let's take a look at one of our portfolios here. I'm going to click into the small cap growth investor portfolio, which is based on the strategy by the Gartner brothers of the Motley Fool. It was a book they published in the late 90s that had a quantitative model in it, and we extracted it. This is actually a very robust strategy. It shows excellent long-term outperformance and actually some consistency, surprisingly. But one of the things that I want to point out here, and it's very important, is all of the portfolios we run on Validea are highly risky and volatile. So, anytime you're buying a basket of 10 or 20 securities in the context of a portfolio, there obviously can be massive deviation from the market in both directions, up or down. Hopefully more up than down, but when the downs come, they can be painful. So that's important to understand. And the other thing worth mentioning here, and this is across all of our portfolios, is every single one of the portfolios we run, even the Motley Fool strategy with this great long-term outperformance, has had periods of underperformance. So for anyone that's on this webinar that is considering following or implementing one of these portfolios, just keep in mind that these strategies do not always work. If they always worked, over time they would not work. So the fact that they don't work and they go through periods of underperformance is a characteristic or an attribute that allows them to continue to work. Okay, so with that, I'm on the portfolio page here, and what we show on each portfolio page, it's going to look the same across all the portfolios. Obviously, the performance is different and the holdings are different, which I'll show you in a second. But you have the performance chart, you have the full return history here. Again, these are model returns, live model returns. None of this is back tested. We launched the portfolios in 03. And then as you come down the page, you're seeing the actual portfolio holdings at the current time. So here are the 10 stocks in the monthly rebalance portfolio. We show you the date we added them, the score when added, the current score, the start price, the close price, and the return. We can also switch this view to a fundamental view, which shows you the fundamentals behind each security. This particular model we're looking at is a growth model, so you're going to get more expensive stocks than many of the value models we run. That's just a characteristic of the way that the strategy is built. One of the other things you can actually do on this table, not that many people use it, but we report the holdings going back historically. So this can be useful in the sense that if you wanted to go back to late 2008 or early 2009 to see what type of pain you would have been experiencing if you were invested in this strategy, to see sort of like a worst case scenario. That's not too bad, but that might have not been the real where a lot of the pain came in. We can look here. So I'm on like October. So anyways, you get the gist. You can go back and see throughout time what the portfolio is holding on any rebalancing date and the performance of those positions. We also show you the latest changes on this page. So for each portfolio, we're going to tell you when a rebalancing occurs, what stocks came in, what stocks were removed. The last rebalancing was July 27th. The next rebalancing is August 24th on the monthly rebalance portfolios. And then the last piece here is the current top rated stocks. We developed this because we had a lot of people coming in between rebalancings. I don't think waiting until the next rebalancing is that big of a deal. I actually sort of tend to say to people, maybe that's a better thing to do because it allows you to kind of get used to the site and get synced up with what's going on and sort of noodle around on the site versus just jumping right into buying a portfolio. But there are some investors that just want to come in and sort of see what the top performing names are and get started, and then rebalance and get synced up to the portfolio on the next rebalancing. So this current top rated stocks section is for those investors that want to do that. Let me just go back to the portfolio page for one moment. You have the ability to, again, you can filter by 10 stocks. You could filter by monthly, quarterly, or annually. And then you got a whole bunch of different return parameters here. And then the two other portfolios I just want to point out are these consensus-based portfolios. Consensus-based portfolios are blends of the guru strategies. So, sometimes there's a lot of models on here. It may not be totally clear if you can't identify the best one for you. The consensus portfolios are different blends of the strategies above that try to diversify out into many different strategies to take some of that strategy-specific risk off the table. Okay, that's the model portfolio page. You can play around. You won't be able to see the details, but if you're not a subscriber, you can come in and play around with this and see the performance and things like that. So this performance page is actually free to use, even if you're not a paid subscriber. Let me go to the Guru Stock Screener now. The Guru Stock Screener is really an idea generation feature. So it's somewhat similar to the portfolios, although a screener isn't run like a portfolio, but what we're doing here is allowing the user to basically define investment criteria to come up with a list of names that they are potentially interested in to invest in further. So using the screener, you can do a couple things. You can filter by specific guru. So you could say, show me all the stocks that 90% score. And what comes in is, a handful of names. Let's actually open that up to, oops, I'm sorry. Let's open this up to Buffett and strong or some interest, which is 80% or better. You're going to get a longer list here. So here are stocks that get at least an 80% score from the Buffett model. And then what we also have the ability to do is find stocks that pass multiple strategies simultaneously. So let's just say we said, to start, we want to find a list of names where at least 3 guru models rate them a 80% or better. So what you're going to find here is a number of, I see what's going on. That's why. Yeah, I apologize. So this is basically a list of stocks that pass at least 3 guru strategies or more. What actually was just happening there, before this webinar, I was playing with this a little bit, and I actually had technology filtered, which I'll show you that in a second. So what was happening is that was just hanging there. So it was limiting the universe. Like when we were looking at the Buffett names, that's why the list was so low, because the technology filter was on. But let's just say, we said we want to see, okay, there's a couple things we can do. Stocks that pass at least 3 guru strategies. But let's say, we know technology is strong here. It's exhibiting, as an industry or as a sector, strong price performance, but we want to have some fundamentals behind the stocks we're interested in. So what I did is I just filtered on technology. So here is, the handful of tech names that score high according to our models. You can click in, and what this will do, anytime you see a ticker symbol, you click back and you're going to get brought back to the detailed analysis, what I showed you before, which is the guru analysis, which is how these stocks are achieving or getting the scores that they're getting. But let's say we want to have it a little bit more broad from a sector perspective, but we wanted to add in some of our own criteria that maybe we felt were important. So let's just say we're the type of investor that wants some income. I'm going to put, minimum of a 2% dividend yield here. So we're going to filter only companies that are producing a dividend yield. That gets the list down a little bit. Let's then say I want to have a, let's do this. Let's do a beta of less than 1. So that would kind of limit some, highly volatile stocks. We're kind of making this a little bit more of a conservative screen. There, we're getting the name down a little bit more. And then let's say, but we don't want to catch a falling knife. So let's put in a 1-year relative strength of maybe, let's do 60 because it's 30 minutes. Fine. Let's see what we get. So here you go. So you get a list of, names that meet at least 3 gurus with a decent relative strength, a market or above market dividend yield, and a beta of less than 1. And there's a lot of different criteria you can put in here. I mean, everything from kind of unique stuff too. Enterprise value to EBITDA, shareholder yield, long-term PEG, net cash to price, liquidation value to price. You've got growth and profitability measures here, momentum, 1 year, 6 month, 3 month relative strength, industry relative strength, quality and ownership criteria. So what we try to do with our screen is make it unique in the sense that it's kind of keyed off the gurus as the first cut. And then, some of these fundamental filters you can add in are in fact different than what you can find in many other screeners out there on the web. Most of the screener is behind the paywall. I think we allow you to maybe run a screen and you get like 3 or 5 names for free. So for people that just want to play around with it a little bit, that would be something they could do. Okay, the next thing I'd like to show you is our trade alerts. Let me show you what this is here. Just going back. Okay. So the trade alerts are a series of high conviction guru signals based on strategies or combinations of strategies that have had historically strong degrees of market outperformance over what I would consider relatively short-term holding periods. So 1, 3, or 6 months. So what we've effectively done here is utilizing these models, we've looked for signals that when these signals emerge on a particular stock, there's a strong likelihood of good performance and a relatively high probability of performance. And I'll explain to you what that means in a minute. Each time a new alert is generated or closed, subscribers get an email notifying you of that. So this is a much more of a rifle shot type of approach. If you think about the portfolios, you're buying a basket maybe of 10 or 20 names. The trade alerts is really, one individual high conviction idea. One of the risk controls that we have on the trade alerts is we do run 15% stops from the buy price. That's actually a pretty tight stop, given just the normal volatility of stocks over a 1 year period. But we found that when you're making individual recommendations like this, and people are buying the individual names, it's better to control to the downside. And then stop out of those positions, even if maybe they come back, and then while at the same time letting your winners run. And so that's kind of what this system is set up to do. So let's look at an example here. Here are the open trade alerts. So you're seeing these. This feature is actually only available to Validea Professional subscribers, and there's a couple other features that are only available to Validea Pro as well. I'm going to show you one of those in a minute. But this is not part of the standard package. These trade alerts are the next level up in terms of the subscription package or the price. One example here is I'll give you an example. So this is the signal name. We have like when Fisher and Greenblatt models converge and other criteria come in. That was a signal. We identified SP Plus. Another one was this Tri-State Capital Holdings. This is the growth earnings revision signal. So it's based on an academic paper, I believe, that particular model. And here we're saying that with this alert, the optimal holding period is 3 months. The average return on all the positions historically over that 3-month period is 10.9% on average versus 3.1% for the S&P. So that's an annualized return of 43.6%. We get it right 67% of the time, which is actually a pretty good accuracy rating. That means 6.7 out of every 10 positions, historically speaking at least, we've gotten it right, which is a higher accuracy than if we just had bought the market over those same periods. And then there's approximately 4.4 alerts a year on this signal. So for all of the different alerts and signals, we're giving you the statistics behind it. So people pick and choose what they want to follow. And we report the performance of those out. And then anytime, as I mentioned, we close the alert. So the expected end date on this one is 10/29. On the 29th, we would issue an email saying this alert has been closed, and you should go ahead and close your alert as well. Okay. The other thing I want to show you, which is the Pro portfolios. This is in the Validea Pro part of the product. This is country and industry portfolios where you have the ability to track through this model portfolio system that we've built the highest scoring stocks on Validea in each industry, country, or region. So it's a similar idea to the Guru portfolios that I demonstrated before, but this is just, kind of more of a focused industry, country specific. On the country side, it's ADRs. We're not actually going direct into the country. So when you see China here, it's not, on the Chinese, the Hang Seng index. It's this is Chinese ADRs that trade here in the US. But let's just take a look at one of these. So technology, here's our technology focused 10 stock portfolio. Obviously, technology has just, especially over the last 5 years, the tech sector has really been a beast. So it's obviously this portfolio is benefiting from that, but also from stock selection too. You got the same thing. You got the year-by-year return statistics, the portfolio holdings, the latest changes, and so on in the portfolio. One thing worth mentioning here, and it's just something I wanted to point out. I was thinking about this right before the webinar because I was looking at this portfolio. Here you have a strategy that's up, done extremely well over the long run and up 38% year to date on 10 stocks. But what I really want to point out is even the best performing strategies, they only get about 60% of the names right in terms of generating positive alpha on those positions. So this is a great example. And what you can see is you have, of the 10 positions in here, you have 5 that are winners and you have 5 that are losers. We couldn't have told you what ones were which. We just know statistically over time, choosing stocks using these fundamentally based models, they put the odds of success in our favor. So the point I'm trying to really get across here, and I talk to a lot of investors about this, it's kind of hard for people to wrap their arms around, but is, if you're following a portfolio system like this, or really your own investments, probably if you're holding, individual stocks in your accounts, you're going to have winners, you're going to have losers. If you see a strategy that has all winners, that's when I would be worried, because that's not reality. The reality of it is even the best investment strategies bat 60-65% in terms of their accuracy rating, in terms of their winning positions. Sort of the key is, again, trying to minimize your losses and letting the really big winners run. So here, in this case, in this December of last year, we added this Appfolio and it's up 77%. So that's obviously helped the year-to-date performance tremendously here. Okay, so that's the pro portfolios. I'm going to pivot here for a minute because everything we've talked about has been guru specific, and I'm going to show you just 2 tools that are relatively new to the site, and they kind of get off the guru models, but they're still based on sort of quantitative strategies and data. And the first thing I want to show you is our trend following tool. So Validea's trend following tool is a trend following system that generates buy and sell signals based on a technical system that combines short and long-term moving averages. Our goal with this system is to help investors determine when to be in or out of an asset or investment class based on the trend or the momentum. What we're really trying to do here is reduce the significant downside risk when any of these particular asset classes goes into a bear market, but then have a disciplined mechanism to buy in once the downturn is done and once the upward momentum reasserts itself. So what you can see in this drop down is a bunch of various asset classes, our portfolios, investment styles, and sectors. And we apply this trend following system on top of those. So here we have the S&P, the Russell 2000, developed, international, NASDAQ 100. You can come down here, you got gold, intermediate bonds. So we're really just saying across the major asset classes, our guru portfolios, and then sectors, how would a trend following, our proprietary trend following system, how would it have helped or maybe even hurt performance? What I will tell you is that there's approximately 45, I think, to 50 different investment or asset classes here. Trend following helps performance and helps risk-adjusted returns big time on 85% of them, approximately. So that's pretty robust when you have that. It's not like it's helping 1 or 2. On the vast majority of these, the trend following system is helping improve returns and reduce risk. Now there's a downside in that a trend following system like this can get whipsawed. They all do. And what it also results in, and this is probably true for the model portfolios we run as well, it results in more touches to one's portfolio. So sometimes with investors, more isn't always better. But if you can be disciplined and you can do more and it's based on a good strategy, that can be better. And those are the things that we try to do here to help folks like yourself basically become more successful, better investors. So let's look at an example. We could look at the S&P. The S&P is like kind of mind-blowing. It's like, this goes back to 1971 because we have data on the S&P going back that far. You got a 2% annualized, this is annually now, going back like 40 years. Annual return with timing versus buy and hold is over 2% annually. That's huge in terms of the compounding effect on a portfolio. And that might seem a little bit too good to be true, but that's what the data is. I mean, that's what the trend following system shows. And here you have 5-year timing returns barely squeaking out buy and hold, and then you have the 3-year timing returns above buy and hold as well. So this is pretty nice. It's pretty robust. But let's look at one that might make a little bit more sense if you've had any international exposure, and it kind of tightens up the chart a little bit more to see it. Let's look at emerging markets. So here we use the Vanguard Emerging Market ETF. That's kind of the leading emerging market fund out there. And this trend following system can be applied to anything that has price history. So this goes back to March of 2005. So here we have buy, stay invested, all the way up to here. So you have June, July of 2008. This, when the trend started to break, our trend following system went to cash. Obviously, the market had the floor fall out from under it, and the financial crisis sort of started coming back in early 2009. We bought here. Actually, that was late 2008 we bought. And then, we had another leg down back into March of 2009, which was the bottom. But then, it was sort of off to the races as the market realized, we weren't going through depression, and we came out of it. And then, we came back down here. EM was selling off. We went to cash. We saved a little there. And it doesn't, as I mentioned, it doesn't always work. But when you have a system that can avoid these major drawdowns when they come, and even here is a good example. In late 2015, if you remember that, this was in cash, and EM went from 158 down to it wasn't quite a 20% drawdown, but it maybe was 15% drawdown. So that's what this trend following system allows you to do. One of the other things is we do report the full signal history here. So I'm just going to click on this. This is going to bring up a pop-up. And then we report, going back historically to when we started the buy-sell signals. So that's important because you can get a sense for how many different changes you would need to make. And ask yourself, particularly when you might have a month in or a month out, is that acceptable to you? It's kind of not. It seems speculative for a lot of investors, and that's completely fine. And I would say that what we believe in is following strategies for the long term. It doesn't necessarily mean just because you're buying 1 month and then selling 2 months later that is totally speculative if it's based on sort of a sound strategy, which is what the trend following system is based on. Okay, we're running. I'm kind of going along here. That is what I've showed you is the key aspects of the investment research site. There are a couple other things I just want to run through with you real quick, and then I'll get to questions if there are any. Under the About Us section, there's more about who we are, our background. We're a relatively small firm. We like to stay lean. So, if you call in to the customer service number, you might talk to me, and that would be great if you have questions. I'm always here to answer questions and work with interested investors that want to learn more about what we're doing. We have some interviews and videos here. John Reese, my partner and founder of Validea, gave some great podcasts recently. If you're interested in sort of where we came from and our beliefs and more of that, and some of these are really, really great. The MetaFavor one with John was excellent. We got really good feedback on that. We have our FAQ section, which is just frequently asked questions about the site. We do manage money for investors via Validea Capital Management and our ETF that we run. For regulatory reasons, I can't talk too much about that, but certainly if there's any interest in that, please let me know, and I will get you some information. And then lastly, we do a lot of writing here. So we have our main investing blog where we kind of are summarizing interesting investment articles and research papers. John writes a column. My partner, Jack Forehand, writes an excellent column here. And then I write a column called Factor Focus. And the last thing is another free aspect of the site is we have a part or a section of the site where we are listening to and cataloging and summarizing the best investment podcasts of the week. There's tons of great podcasts out there. It's kind of like revolutionizing, I believe, how investment knowledge is getting disseminated, like long form stuff. No commercials generally, which is really good, and there's a lot of smart people out there. And so this best investing podcast is our attempt at trying to summarize those and coalesce those in one area. So with that, I'll take some questions. Let's see if we have any. If not, that's okay. Sometimes there isn't, but maybe there are. What I am going to do is I'm going to go through, and for each of you that was on this webinar, I'm going to send you the Buffett and the Lynch chapters. And I'll also send you a link where if you want to try out Validea, I'll give you sort of a special deal and see if you want to take advantage of it and do a free trial if it's something you're interested in. If not, that's fine too. Like I pointed out, there's many parts of the site that are free. People use it every day that aren't subscribers. While this is a for-profit business, we also want to make sure that we're providing value to those people that just want to learn and grow. And so they're between the Guru analysis that's somewhat free, the blog that we do, the Best Investing podcast stuff, and just more of the research on there that is in front of the curtain. Hopefully that's somewhat valuable and you can learn from it. So I'll just hang out for like 30 more seconds, and then if no questions, I'll let you guys go. All right, well, listen, thank you all for taking the time to join me today, and we hope to see you on Validea. Please check your email momentarily for the email coming across, and appreciate your time. Have a good rest of your summer. Take care. Bye.